All right, and as NHTSA reported, Puerto Rico sold $3.5 billion of general obligations on March 11. That was the municipal market's biggest ever junk deal. And for more on that, we're joined by Triet Nguyen, managing partner at Axios Advisors and author of Investing in the High Yield Municipal Market. Thanks so much for joining us, Triet. Let's get straight into it. The Puerto Rico Senate Minority Whip claims that the territory's ratings was cut to junk as a political move benefiting Wall Street. Some have argued that Puerto Rico complied with the ratings agency's wish, like cutting pension cuts, raising taxes, and slashing the budget. But then on the other hand, Puerto Rico has $72 billion of debt. Its economy's contracted 14% since 2006, and it's got a 15% unemployment rate. So bottom line, in your opinion, were the rating agencies correct in their cut?
Hi, Michelle. Well, thanks for having me. No, we strongly disagree with that. If anything else, I think the rating agencies took too long to downgrade Puerto Rico. If you recall, Puerto Rico bonds were trading at junk bond levels for almost 9 months before the actual downgrade. So if nothing else, I think the rating agencies actually bent over backwards to accommodate the Puerto Rico and give them a chance to fix their house, but it just didn't happen. The economy didn't recover, and they had to pull the trigger.
But in terms of risk of default, Puerto Rico's constitution includes explicit protections for bondholders. The territory is in fact legally required to pay bondholders before meeting any other obligations like paying government workers or providing basic services. So surely that provision makes risk of a default lower and would lend itself to a higher rating?
In theory, yes, but as you know, some of the jurisdictional issues because Puerto Rico doesn't have an actual bankruptcy procedure, it makes it very uncertain how things are going to play out in local Puerto Rico courts. So that's what the investment community is concerned about, and that's the kind of risk that they're pricing into the bonds.
Well, according to Puerto Rico's representative in Congress, Puerto Rico's debt crisis results from the island's status as a territory rather than as a United States state. He says that Puerto Rico is losing $2 or $3 billion every year because of the status as a territory. What do you think about that comment? Do you agree?
It's only a partial truth, as in anything else. If they became a state, they may lose some of the subsidies that are coming their way, particularly in the healthcare arena. So it could be, they may not wish to get what they're wishing for.
Well, we did have a big sale on March 11th, $3.5 billion of general obligations, the market's biggest ever junk deal. Today, though, in fact, the bonds fell to a record low price. What do you make of that?
Well, when the issue came to market, it was touted as a big success, but I think, and the bonds did trade up by about 4 points from the initial issue price of 93. But as we're finding out, a lot of the participants in the bond issue turned out to be short-term traders who just wanted to trade them for quick profits. And also, I think this week, FINRA started to investigate the fact that a lot of the bonds are being sold to retail investors, whereas they're not supposed to, because there was a minimum denominations of 100,000, and apparently broker dealers completely ignore those.
Let's talk very quickly about the muni bond market overall. Junk ratings have earned about 5.8% so far this year. Do you think that this is a good time to get into the muni market?
Yes, I think away from the well-publicized issues of Detroit and in Puerto Rico, the rest of the municipal market is doing quite well. And as you mentioned before, there's not a lot of supply, so there's a little scarcity of bonds. And with the U.S. economy recovering, credit quality is recovering also. So we are very bullish on the rest of the municipal market, away from the much publicized Detroit and Puerto Rico sectors.
All right, a few bad
high
apples,
yield-
but overall,
I'm sorry?
overall a good market. All right, we're going to have to leave it there.
Yes.
Thank you so much, Triet Nguyen, Managing Partner at Axios Advisors and also the author of Investing in the High Yield Municipal Market.